Hello there! So this is the second in my high yield dividend stocks by sector series of videos, and in today's video we're going to be looking at the highest dividend yield banking stocks that are available to invest in right now. If you're new to this channel, welcome. My name is Andy and on this channel I like to talk about money and success. If you're interested in making, saving and investing money, please be sure hit that subscribe button down below, hit the notification bell, and then you'll get notified every time I release a new video. And if you enjoy this content and find it useful, please do remember to give it a thumbs up because that helps YouTube algorithm, which in turn helps me, and of course I do appreciate it. Now this video was requested by Dennis Rost. He actually asked if we could take a deeper look into some banking stocks on my communities tab, where I asked what kind of videos you would like to see in my high yield by sector series of videos. So if you've got any ideas of a sector you'd like me to look into and make a video of, please do let me know in the comments down below and I'll be happy to do that. Now today's video I'm going to break it into 2 or 3 parts really. So first I'm going to show you the whole list of all of the banking stocks that we found that have a dividend yield over 4%. Then I'm going to show you a refined version of the list whereby I've got a number of those stocks that have had over 6 years of consecutive growth for the most recent 6 years. So which ones of those have the highest dividend yield, and we'll do a little bit more of a dive into those to try to work out which ones of those are best for investing in. And then at the end of the video, I'm going to let you know which stocks I would be interested in investing in. And I'll be honest with you, one of them isn't even on the list, but it is a banking stock. You'll see what I mean if you make it to the end of the video. How's that for a hook? See if that keeps you watching. Anyway, let's have a look. I'll show you the whole list to begin with. 35 stocks. Here we go. So as you can see, ticker symbol RY. I'm not going to read all these ticker symbols to you. If you want to capture this list, take a screenshot now. I'll give you a couple of seconds to do that. And now I'm going to scroll this screen up so that you can see the next bunch of stocks. Take another screenshot just there, and that'll give you those particular stocks ticker symbols so you can research into them. And there you go. Those are the highest dividend yield stocks in the banking sector. Was that the quickest video ever or what? Now we're going to look at the condensed list. Okay, so here we go. For inclusion on this list, stocks must be a diversified bank, must have had a dividend yield of 4% or higher, and must have raised their dividends for 6 or more of the most recent consecutive years. So, as is the case, like we did last time, we're going to have a little competition. I'm going to whiz through the metrics real fast. So if you are interested in the metrics, you'll have to take screenshots or pause the video to have a look at a deeper dive. I'll just whiz through them fast so we get to the results. So let's do this now. So first thing we're looking at here is the assets versus the liabilities. I always talk about how important assets versus liabilities are. As you can see here, the score is the bottom column, the bottom row even, sorry, that row there, I'm highlighting it for you now. And that basically is very similar for all of them. It's perfectly good. They're all over 1, so they're all fine. None of them are particularly exceptional. They're all just basically okay. So for that round, it's a dead heat for all of them. So, you know, CM is Canadian Imperial Bank of Commerce. USB is US Bank Corp. BMO is the Bank of Montreal, another Canadian bank. TD is obviously the Toronto Dominican Bank. And RY is the Royal Bank of Canada. So would you believe, once I'd narrowed this list down, 4 out of the 5 were actually Canadian banks. Just as it happens, that's how it is. So if we look at the book value, you can see the current share price, the book value, and then you can see the price as a percentage of book value. Obviously the lower is better because they're close to book value, therefore cheaper. So as you can see, CM is quite clearly the cheapest one, followed by BMO, Bank of Montreal. So on round 2 results, you can see I've given 1 point to Canadian Imperial Bank and I've given half a point to the Bank of Montreal. Okay, now let's look at the dividend yield. So the dividend yield is as you see here. So the Canadian Imperial Bank of Commerce has a 5.22% dividend yield, whereas the US Bank Corp has a 4.63% dividend yield. The Bank of Montreal has a 4.45% dividend yield. TD has a 4.1% dividend yield. And RY, the Royal Bank of Canada, has a 4.18% dividend yield. They all pay their dividends quarterly. You can see there how long they've been growing the dividends for as well. So you can see Canadian Imperial Bank has been growing it for 6 years. However, the most recent 2 dividends have been much lower than usual. If they continue, then their forward dividend rate will be much lower. So that's a little something you need to take into account with this one. I've put a note on the US Bank Corp as well. Their dividends did totally collapse in 2009. Bearing in mind that was the last financial crisis, 2008. That is something you may want to be aware of when investing in a bank. It did totally collapse in 2009, but it has been raising ever since. And then the others are what they are, 7 years, 8 years, 7 years. And then you can see what their growth rate has been over the past 5 years. So if we look at the results, there are the results for round 3, dividend yield. I've given all of them half a point, except the Canadian Imperial Bank, which has got a whole point. Dividend growth in years, USB has got 1, BMO half, TD half, RY half, and CM 0. And for 5-year growth, for the growth rate, again, it's been the same story. So for round 4, we're going to take a look at the historical growth of these particular companies. Particularly, we're looking at the growth in profit. So let's take a look at the chart now. Here's the chart for that. As you can see, that's where they all started and that's where they all ended. And that is quite a confusing little graph. The thing I will point out is there's a clear winner on that graph. If you look at TD started off with an annual profit of 12.6 billion and ended with a profit of 35 billion. And the other one that seems to have done really well is RY, which started off with 16 billion and ended up with 38 billion. Now then, don't worry. If we go over to my spreadsheet, you can see here, I've actually put what the multiples were. So the 12-year profit multiple growth, if you like, CM was 1.83 times higher. USB was 1.43 times higher. BMO was 2.08 times higher. TD was 2.76 times higher, so considerably higher than the others. And RY was 2.53 times higher. And so for that reason, for the profit growth, I've given BMO 1, TD 1 and RY 1, all because they got over 2. But really, remember, TD and RY did grow that little bit faster than any of the others. But that's the reason for those scores. Feel free to adjust it as you see fit. So next, we'll look at the analysts' forecasts. And this spreadsheet here shows you what the analysts are forecasting the increase to be over the next 12 months. I normally show you the graphs for that, so I'll quickly whiz through the graphs for you now. The Canadian Imperial Bank, and you can see the price target upside is 6.15%. All of this that you see now, by the way, is from Seeking Alpha Premium. If you would be interested in getting Seeking Alpha Premium for yourself, if you've not got that already, I do have a special offer for you. I'll put it in the pinned comment and in the description down below, where you can get a whole year of Seeking Alpha Premium for just $99 if you use the link in the description down below. So that'll be down there for you now. I'll put it up there as well, so you've got that too. Anyway, let's carry on with this. So 6.15% is the upside for that one. On US Bank Corp, if we scroll down, you can see it's 20% upside predicted. Bank of Montreal, I believe this one is. Yeah, Bank of Montreal, 2.73% upside. We go to this one. Toronto Dominion Bank, and that's got a 5.58% predicted upside. And RY, or the Royal Bank of Canada, has a 6.4% predicted upside. So if we go back to the sheet, you can see there the clear winner was the US Bank Corp. So that is the clear winner there with a 20% forecast, if we're to believe that the analysts know what they're talking about. And so there we have it. There's our final scores. CM gets 3, USB gets 4.5, Bank of Montreal gets 3.5, TD gets 3.5, and RY gets 3.5. So there's the final scores on that part. Now let me tell you about the two that I personally prefer, because I've got to be honest, I went through all of that and I thought none of them were particularly interesting to me. I mean, by that metric, you would say US Bank Corp is probably the winner, and it is if we're weighting it the way I've weighted it there, and you're welcome to go back through the slides and weight it however you want to weight it for your own scoring. But would I be particularly interested in investing any of these particular stocks? Not really. I didn't find any of them particularly exciting. And obviously you need to do your own research before investing in these stocks and shares. I'm not a financial advisor. This is not financial advice. But out of the bunch, these are not the ones I'd be looking at. the two that I've identified that I actually would be much more interested in, I'm just going to show you really quickly now, and then if you want to research them later you can. If you want me to do a deeper dive video on them, let me know and maybe I will do that. But in doing this research and glancing through lots of banking stocks, there were two that stood out, one of which wasn't even on that list because it didn't fit into Seeking Alpha's sector by diversified bank, but it is a bank. So let me show you now those two. So the first one is this one, the Bank of Nova Scotia. So I'll quickly give you an overview of the Bank of Nova Scotia and why I'm feeling this way about it. So firstly, you've got a 6.18% dividend yield. So that's higher than any of the dividend yields from the ones we looked at. Secondly, if we go over to the ratings tab here and click on Wall Analyst Ratings, you can see we've got a 21% upside. So that's, again, better than any of the ones that we just reviewed there. So then why wasn't it included? Well, it didn't have 6 years of consecutive dividend growth, but let's look at its dividend so you can see exactly how it lost out and why it's actually not so bad. If you look, whilst, yeah, sure, it hasn't got 6 years of consecutive dividend growth, it has been growing its dividends. But as you see, every now and then there'll be a dip. So there was a dip there in 2010, then it started its merry climb again, dipped again in 2011, started its merry climb again. It had a fall back there. If you look, 2015 was basically a falling year for its dividends all the way down there. And then it started its climb again. So if you're happy to live with it being a general uptrend, but sometimes it being going down a little bit, then this is certainly one to consider. And that's why I like this one. So this is the Bank of Nova Scotia. So personally, out of all the banking stocks, this is one of the two that I would be considering. The other one I would consider is New York Community Bank Corp. And if we look at its summary, you'll get to see why. So again, you've got a super high dividend yield, 7.65% dividend there. If we look at its ratings with the analysts, you can see they've got a 19% upside predicted. So again, they're predicting it's going to be going up. So that's obviously a good sign. As you can see, both Seeking Alpha authors and Wall Street analysts have this as a buy. And if we look at its dividend history, this is where it lost out and the reason it wasn't included in the list. If you look, it was flat, then it fell, and then it stayed flat. So this is one, if you're just looking for the higher dividend, but you're not expecting that dividend to grow, then this is maybe one to consider because clearly they haven't been growing their dividends. Now they've got the headroom to grow the dividends. If you look at the payout ratio, I believe it had the headroom. Let me just have a quick check on that. Yeah, 52% payout ratio. So there is space there. If they wanted to increase dividends, they could, but they've obviously got no need to. As a banking stock goes, that is a very high yield stock. I hope you found all that useful. If you're interested in the video I made last week, that was the energy stocks. Check that one out. Otherwise, why not check this video out here? Thank you so much for watching. Have a nice day and bye-bye.